and AI here at Cantor. And we're very happy to have Nitesh here, the CFO of SoundHound AI. I would make a bet that a good chunk of you here in the room are absolutely familiar with SoundHound. You might know a couple of things they do conversationally, but maybe I'll just give maybe a 1-minute intro for you, Nitesh, that would help us kind of level set before we jump into all the questions about what SoundHound AI is doing for the market.
Sure. Well, thanks for having me, Tom. Glad to be here. So SoundHound is a conversational AI and voice AI leader. We've been a pioneer in the space for over 20 years. Our founders built this company with the vision of voice enabling the world with conversational intelligence. Did their PhDs at Stanford, pre-iPhone days, in speech recognition and machine learning, and have built a proprietary stack. So we're one of only a handful of companies in the world that own all the pieces, parts of the voice AI tech stack from a software perspective. And we think that gives us competitive differentiation because we can innovate quickly, we can modernize, and we've been growing rapidly. We announced our earnings just 10 days ago. And we're really trying to disrupt the world and bring a new horizon of how humans interact with technology. And I know we'll talk a little bit further, but every 15 years, 20 years, there's a new major inflection in technology. We think we're in the middle of them. We think this is the Gen AI LLM era. And within that, we think this is going to change how humans interact with technology. Rather than just a keyboard input or a touch-type swipe on your phone, humans will be able to do a lot more interacting with technology through natural conversations and just conversing how we're doing now, how humans have done it for their history, tens of thousands of years. And within that world, we think voice AI is the killer app, and that's what we've built over time. So we have many applications across products, automotive, in the services space with restaurants and financial services and healthcare, and we're building an ecosystem of monetization and voice commerce to connect voice-enabled product with voice-enabled services.
Yeah, well, that's a great overview for a relatively complex company in the sense that you do cover a lot of areas, and I like the analogy that you talk about with, conversational search, even comparing your company sometimes to Google, which I think is interesting. And you mentioned competition. We get a lot of questions from investors around, how crowded is this market? Who do you compete with? And again, there's probably a number of different competitors because you do have this diverse model that we'll get into. But maybe kind of help us understand who you're competing with and trying to win against.
Sure. Yeah. Depending on the industry, application, and sort of pillar, we see different competitors. So first, like I said, our differentiation is generally in tech. When we go head-to-head with competition, we generally win on the basis of better technology. We also have different go-to-market motions and different ways we partner. So I'll kind of unpack a couple of these. First, where we got our foray, we unveiled after 10 years in stealth, we launched our voice AI engine in about 2015, 2016. And the platform first got a lot of attention from the automotive makers. Naturally, voice makes sense while driving. It's a safety issue. You want to keep your hands on the wheel. And there was one major player. It was Nuance for many decades, who was a leader in the voice in the AS speech recognition space. They spun off a public company, Cerence. And in automotive, that's who we've been stealing share from, frankly, over the last several years. They came in with edge solutions, meaning they did it in car without internet connectivity, so you could turn up the volume, turn on the AC, open the windows type of thing. We got traction with cloud capabilities, so you can connect to maps and navigation and connect to what happened in the game last night or what's going on with the stock. And we got entry and ultimately have been displacing them. So we now have over 20 automotive brands in our part that we work at that are customers of ours. And we're continuing to scale across new players. We've gained a lot of traction with EV companies, which tend to operate at a greater speed and more software-centric, and so we've been able to gain a lot of traction there. So a lot of displacement with Cerence. There's also the big tech that play there. Our differentiation, number one, when we go head-to-head, we have customer benchmarks that we do head-to-head better technology and better performance from sentence accuracy. How does the voice AI operate and understand? Yeah, and we've... The other difference is we do it in brand centricity. So we'll do white labeled. You can say, hey Hyundai. You don't have to say, hey Alexa. And we have a broader suite of products. So we, again, do edge, cloud, hybrid engines. And so that's where we've been playing. So that's the automotive space. When you get into IoT, it's really much more nascent. There aren't many players. And so it's a lot more greenfield. When you get to services and restaurants, also pretty greenfield. There's some legacy players, private companies may not have heard of, some call center players, But really technologically, when you see one of the ways that people measure success customers is when I order something in a drive-through or phone ordering, how successful am I at completing that order? So order accuracy. Right. Humans, we know post-pandemic, actually, there's been deterioration, even human quality. You might drive into a drive-through and say, I want cheeseburger, hold of pickles, you'll still get pickles. Or you'll say, I want french fries, you'll get onion rings. That happens when we say humans are about 85% accurate. Well, our technology, purely AI, in many cases is exceeding human performance. So we go 85% out of the gate. We work with them for several months. We're 95% accurate. And on an AI to AI basis, we really don't see many equivalent players. There's some people who put a human, it's kind of Wizard of Oz, and have a human there, and they'll say they're 95% accurate. But really, ours is fully AI. We will have a human backdrop if needed, or a fallback, but generally, it's greenfield. Now, there are one thing our co-founder CEO 𝗖𝗓𝗡𝗡𝗖𝗧 says. I've always liked this line. It's voice AI is hard AI. It is tough to build. We, again, 10 years in stealth, have been building on this for years and years. And it takes 10 years to develop. It takes you 3 years to realize it takes 10 years to develop. And we've seen that over and over again. We have actually investors in the company, major tech players who tried to do it by themselves for a while and then came in and partnered with us. Probably one of the most notable examples recently is McDonald's, who tried to build it in-house. They actually acquired some companies. They ended up selling that capability because it was too difficult to do it in-house to IBM Watson. IBM had a partnership and scaled to like 100 locations as a pilot. And then recently, within the last 6-9 months, all public information, said, hey, we're going to stop this relationship, or we're going to look for voice AI solutions elsewhere. So you see this happen over and over again. People are like, well, how hard can it be? Let me build it. But it truly is hard, and that's why many customers come to us solutions. I know I'm going long on the competitor answer, but one last play I'll say, we're getting a lot of traction in the enterprise side, financial services, and healthcare. And again, there's some conversational AI players. We acquired a company last year, Amelia. It gave us footprint deeper into the enterprise stack, into these new verticals for us. And one of the big things when we were diligencing the company, we have 7 of the top 10 money center banks. And the biggest thing they wanted to see was, how do you move conversational text-based to voice? And it's just a hard horizon where they were using third-party agents from the likes of Microsoft and Google. And we came in and we've been able to displace those third parties with our own solutions. For us, obviously, it's moving into our own stack. It's cost efficiency, it's speed benefit, but frankly, performance-wise, we're able to do a lot more and innovate. And so, a lot of different players in the different verticals we play in. It's an early days and emerging space. We know more and more players will come in, but we think we've got a nice running start.
I would implore the audience to go to the SoundHound YouTube videos, where a few years ago when I met this company, was impressed. It is truly better technology, at least from a usability perspective. I'd be just double-clicking on the competition before we leave it. We're reading very recently about Alexa, and even I think Apple made an announcement this week about maybe double-clicking and doing some whole software uplifts in terms of conversational technologies. Do you think this could expand and kind of naturally acknowledge the market type of thing, or do you think that this could change the competitive landscape from these big guys?
Well, let me make a more broader point, and then I'll hit the specific question. So every generation, there's some new major inflection in technologies. I mentioned at the beginning, we think we're in the new natural conversation era. The capabilities that LLMs are providing in terms of flexibility and capacity to hold conversations, very complicated conversations, just like how humans converse. This is a new era. This is where technology is shifting. So anytime you end these sort of brave new eras, there's going to be all sorts of new competition, and incumbent players in one space are going to try to get their footprint into it. And I think that's a sign of a very healthy, attractive market. Right. And we welcome it, and we compete head-to-head with many different players. I do think there's validation, absolutely. We see it in the restaurant space, we see it in the enterprise space. We see, players who have traction in one part of the market saying, hey, this is where conversationals are shifting. We want to make sure we're following track. So I think that's a sign, and yes, there are going to be major players. Obviously, the companies with unlimited resources could spend unlimited amounts and could do a lot of things. But I also will say, and I spent a large part of my career at mega cap companies, that innovator's dilemma is a real thing. It is hard to reinvent yourself. When you have a big profit pool, to be able to risk it and try to enter new areas is a very challenging dynamics, and that's why we see new breakthrough companies all the time. We hope to be that in this new era. We believe, again, our right to win is our proprietary voice AI stack. And I think the difference also is in this world, as said many, many times, data's gold, and companies, our whole model is brand centric. I mentioned this in the auto space, but generally speaking, we are very flexible and agile with how data is managed. We work with customers. We know it's their customer relationships, so we work in partnership for how to manage the data. We want to use it to refine and improve our models and to scale, but we understand, like I said, in the automotive space, that Hyundai, it's their customer, and we want to work with them. Right. We also think of that with privacy. We think of that with security domains. We think of that with all the capabilities we're bringing. So our go-to-market motion is different. I raised that in the point of some of the names you just threw out. I spent many years prior to coming to SoundHound at Nike, and one of the biggest challenges that Nike had was, it's their customer footprint. And when they would start to partner with the big tech, how is the data and the customer conversation holding? Because there's always risk of disintermediation. And again, our model is, we're brand centric, and we have our own unique way of winning in this market.
And that's a whole other vector of wanting to control the brand with some of these large OEMs. And I think that's a loose segue to the diversity of your business in terms of different types of products, but also different types of rev rec, right? You have the percentage of revenue from recurring sources has increased through the Amelia acquisition. Maybe talk about where you expect that model to go to in the future, and if there's anything you want to maybe say about the product royalty business as well. That's about, I think we model about 20% of your revenue.
Yeah, so 3 pillars, and I'll unpack each of them. So the pillar 1 is voice-enabling products, cars, TVs, IoT, and that's a royalty licensing business. And up until 2023 was the vast majority of our business. Almost 85% of our business came from that. And these are, if you think of the application in vehicles, as a car is shipped, we get a royalty. And the royalty rate depends on the capability we provide. So with edge solutions, you can think of roughly kind of single digits per vehicle. When you get cloud capabilities, it could be higher price points. And we are the first company who went live in partnership with Stellantis, went live with integration with OpenAI. And so that was early 2024 with their premium line DS premium brand, and then they've scaled into many other brands. And that Gen AI capability is a price point above it. So if you think of there's 90 million global light vehicles produced per year, take whatever average price you want it, but just for simple math, say $10 per vehicle, that's $900 million or nearly $1 billion of opportunity annually. Call it reoccurring revenue, because as new vehicles are shipped, that's when we get the collections. And it's a lot more complicated because you do upfront work. You might have to build custom environment, product feature sets, new languages, et cetera. And then if it's a 5-year contract, for example, revenue recognition for that workload will spread over 5 years, even if you've collected the cash. But that's kind of pillar 1. And to your point, it has definitely shifted as we've grown pillar 2 aggressively this year, which is pillar 2.
Before you get to pillar 2, on pillar 1, because there's a lot more IoT devices, there's a lot more televisions, there's a lot more thermostats.
Absolutely.
Besides the 90 million cars from New Jersey.
It's a huge opportunity, and
But how would the royalty business work in terms, because you can't take $10 from.
No, the price point will change depending on the application. But there's, a royalty rate. You could also put consumption economics on it. I'll talk about the third pillar in a second. Okay. But you're absolutely right there's projected to be 75 billion IoT devices in the next several years. So, and you're right, it's smart appliances, but it's all sorts of infrastructure. And one of the real differentiators with voice AI as compared to traditional technology architectures is that for many of these IoT devices, to have a keyboard or a big GUI interface or have a mouse connection is really difficult. They don't have the economics, they don't have the space. But to unlock the power of voice AI, all you need is a very inexpensive microphone. Yeah. And, $5 microphone, and you can unlock the power of voice. So for us, we see that as a huge horizon. You're right that depending on what it is, a larger refrigerator or a TV can actually afford a decent royalty, but if you get into smaller footprint devices, maybe not. I'll come back to that point because it's a really important point that even a light bulb can unlock the power of voice AI, and to have a capability to be able to say, time to replace my light bulb, or those things can be connected through our monetization framework in pillar 3. But just before I go there, I'll go to Pillar 2, which has become it's the biggest growth engine. It is now comprised of 2/3 of our business in 2024 that we just reported earnings on a short while ago. And Pillar 2 is subscription typically. And think of the restaurant application. So in a drive-through setting or in phone ordering for pizza, per location or per lane, we generally get a monthly subscription fee. And that range depends on the customer, depends on the number of locations. And generally, it's a fixed rate, but there also can be per order or per query. And oftentimes, like these contracts are generally based on like up to a certain number of queries, there's a fixed rate, and then to go above, there's an incremental rate. We have the same applications with healthcare and financial institutions, which could be based on interaction. So if you call in, you need to reset your password, you need to do some banking service like transferring money, or you need to book an appointment for a follow-up dental exam. These things are per interaction, and again, they're subscription SaaS-like typically. And the vision was always, and what we built and what we unveiled earlier this year at CES was our voice commerce engine, what we call Pillar 3. And to give you an example, this is connecting basically voice-enabled services with voice-enabled products. So just one simple, maybe people who drove to this conference, or maybe you're driving into work and you want to access coffee in the morning, you could just now, instead of fumbling around with your phone and looking for that app, you could just talk to your car and say, I'd like coffee. Well, the car knows where you're going, and it can say, great, there's a, next exit, 5-minute detour, there's one coffee shop, or there's one closer to your work. Would you like me to order your cappuccino for pickup? That simple transaction created value to the user because, again, you're not stumbling around, you're focused, eyes on the road, and you got access to the coffee you needed to pick you up in the morning. And that restaurant would happily pay for the lead generation of that transaction. A new lead is a new business. And then if you consummate the transaction, the transactional economic, or kind of think of the commission rate of it, they'd be happy to pay. And our model is that we share part of that commission with the product creator, or in this case, the car manufacturer. So now if you're a car manufacturer, even you're incented because you're like, wow, not only did I sell the car and I got users engaged, but I actually can get monetization through this. You can think of that with TV applications and watching football on a Sunday, and you order the pizza at halftime. You can think of so many applications of booking for flight reservations or your next vacation, or again, medical services and so forth. So we are just building this ecosystem. Early days are tremendous traction against. We just launched it at CES in January. The number of OEMs who are engaged, the number of restaurant partners engaged, beyond restaurants that are starting to get engaged. It's early days. This is ultimately, like, we think in terms of meaningful revenue contribution is still a little ways out. But really early traction, and very excited.
Yeah, I think you mentioned that in your 2025 guidance. You're not factoring in, if any, voice commerce. We'll call this Pillar 3. There was a couple mentions about proof of concepts, a big uptick or in the number of proof of concepts, and it seemed like there was a flywheel effect to that, to those wins. Talk to us about how that's going to impact the model from a flywheel perspective, like voice commerce maybe impacting royalties, or other way around, subscription impacting voice commerce. It seems like there's an interplay to the division. Yeah,
exactly. Going back to the example of the person driving into work and picking up their coffee. Again, the user is excited because they're getting exactly what they want when they want, a very seamless transaction. The restaurant gets new leads, and the car manufacturer is getting new revenue streams. So that is actually the ecosystem that we're building, that flywheel effect. So to your point, we've gotten POCs, not only with, by the way, our existing automotive partners, but we're getting new automotive partners who are saying, how do I get into this? Even if it might, maybe the royalty business will come down the road. I just want to get into this ecosystem because, again, from a Pillar 1 perspective, they're seeing new revenue economics, connectivity for new services for their drivers or passengers. Restaurants are super enticed, and they're leaning in because they're like, wow, now I got people just driving, and I want to make sure when it shows up on the map that my restaurant is on there. If you're going to pick pizza, make sure I'm on that list. They see a new way of getting leads. And then, again, from other ecosystem partners, it's like how people, I don't know the latest data, but I think it's like people on average spend 60 minutes a day in the car, through commute and so forth. So it's a captive audience. And again, safety issues or, and it's also platform providers that are engaged here because voice, again, it's how humans have interacted for our history with one another. It's the most natural way we converse. We've learned to type really fast with our thumbs over the last, 15 years, but we don't have to learn how to speak. And so to be able to access services and things that you need in your daily life, we're getting a lot of traction. It is building a flywheel.
You mentioned the Amelia acquisition. This was a relatively large acquisition for SoundHound. Maybe just like refresh us, maybe the why and why now. It seems like with this large voice commerce opportunity, again, going back to the queries that we get from investors, and we have them as well, why not just kind of take that path and not try to double down on healthcare and financial services subscription deals, which is it's a big business as well, but it's kind of maybe more of a we talked about Enterprise Connect earlier. It's more of an enterprise type of business as opposed to commerce. Like how do those fit?
Yeah, so I'll go back to our foundation is a tech platform, the voice AI platform, and we believe it will be ubiquitous. So voice will be the preferred way that people seek access to services, and we're just trying to, again, voice enable the world with conversational intelligence. So when we started down this path, we didn't necessarily say we wanted to limit ourselves to certain industries or sectors, but we thought of our entry into restaurants, which is a big opportunity. On its own, it's billions of dollars of annual opportunity. And like I said, running start, more greenfield competitive landscape. We think we've got a lot of traction. But for us, we believed restaurants to us was like what books was to Amazon. They were building a big e-commerce ecosystem, but they weren't stopping with books, right? They wanted to start with that. And we started to get great traction with restaurants, over 10,000 locations and great partnerships, and continue to scale 7 of the top 20 QSRs now, and many more in pilot that we're hope to unveil over time. But I would say at this point, last year, we weren't necessarily looking and screaming to say we need to diversify industries, but we do have, in a burgeoning market and something that's moving really fast, you need to keep a pulse on what's going on. And like we talked about, a lot of competitors moving in, a lot of new players showing up, and we have a dedicated team that's constantly on the pulse of what's going on. Do we want to learn who's a new competitive threat, new partnerships we want to get into, and sometimes that manifests into an acquisition. With respect to the Amelia transaction, we met the team. We got to know them a little bit. We could have had a lot of runway with the automotive and restaurant sector and the IoT, but it was a time and a place that made a lot of sense, and attractive valuation from our perspective, and ability to jump into enterprise settings like healthcare and financial services that on their own, because of the regulatory, the security, the complex integrations, probably would have taken us several years to build on our own, to build a go-to-market motion. To accelerate that journey and build that capability made a lot of sense for us. And again, at attractive economics. And a lot of it, there's 15 reasons why they don't happen. You need to have a lot of things click, and ultimately it comes down to team and culture and aligned vision and sellers who are motivated and that made sense. So we're very excited, and the early traction with it is great. The teams are integrating really well. We have a dedicated enterprise team. We're investing in it. They went through their own journey. We're kind of re-inflecting in certain areas where we see outsized return opportunity. And there's a real complement. So since we are the voice AI tech stack, for example, our speech recognition engine, which we benchmark, we talked about in earnings how comparable to other major players out there. We talk about performance of our new Polaris speech recognition engine compared to Google, and how it's 30+% better in performance, and we compare it to OpenAI Whisper, and it's how it's equivalently better, but also at 1/10 the model size, meaning the cost efficiency there is. So we're competing against all the best out there. We're winning on that, and we know we can, in these major enterprise customers, displace those engines, put our own voice stack in. We don't have to pay third parties. That has multiple benefits, not only in performance, but also our ability to capture data, improve our own models. So for many reasons, it made sense for us. We're not, on the path of just acquiring for no reason. Like, we'll be thoughtful about it. Like you said, it's a meaningful size, so we're in digestion mode. We're integrating. Early days are very positive, but we don't take things for granted. So, we'll be mindful about opportunities as they come. We're not, out there thirsting for the next one, but if something makes sense, then we'll definitely take a look.
Right. Let's pause there for a second. Are there any questions from the audience, by chance? Right here.
Thanks for the presentation. Was wondering if I could start off with a technology question and a finance question because you're the CFO. In terms of the technology stack, I used to cover a firm, Nuance, before the spin-off of Sirius. What's the technology edge that SoundHound AI has against Sirius after the spin-off? Their pitch back then was because they've been in business for differentiates your voice recognition versus other competitors? And then as for the finance follow-up question is, what is your financing needs now, and how do you balance your capital allocation between what you're going to invest versus your needs?
Yeah. The first question, to give you the history, so Nuance had the relationships, and they definitely, had the partnerships. In fact, when we first unveiled our technology, and there is a nice, just a quick 1-minute demo on our investor page if you want to take a look. And this is from 2015, 2016, so even compare it to state of the art today. But it was well differentiated then. When we unveiled that, we had OEMs come to us because they were looking for somebody who had better innovation, could move faster, was much more flexible to work with their existing relationships. And that's how we got entry, and we had actually many of the OEMs who invested in us and still are investors in this company. And that's what got us traction to where now we have 20 brands that we work with. And there's a couple of things on the technological footprint. First, again, we built native stack up from the ground up, and again, built by our engineers that have been together. But by the way, this is one side differentiator I think that doesn't get on the headlines for SoundHound. In Silicon Valley, we're in the backyard, we're in Santa Clara. We actually have a founding team and a bunch of engineers who've been together for over 15, 20 years. And that is a rarity in the Valley, and I think that gives us a lot of advantages that sometimes don't show up on the surface of the P&L. But anyway, back to your question. So we had differentiation, for example, on speed accuracy and low latency. We had a technology we called speech to meaning, which means we're traditional stacks, and the ones for Nuance and others were like speech to text, and then you go from text to meaning, 2-step process. We did those simultaneously, inspired by the brain, and that again allowed for two benefits. One, it was faster, lower latency, but it was more accurate. There was no error propagation. If you had an error in step 1 that would carry forward to step 2, we would be able to catch that early. There was other ones with the architecture around how we did natural language understanding. We had our own domains. We brought in and got entry originally with cloud capabilities. So Nuance was traditionally on the edge stack. We came in and integrated with cloud, and then we subsequently would go in with cloud and then displace on edge. So we in the OEM space, because relationships matter, our disadvantage was those long-term, decade-long relationships. But we always won on technology, and it was a constant innovation. We were also the first, like I just mentioned, to bring integration with OpenAI stack and ChatGPT with Stellantis vehicles. We have an arbitration engine and a sort of agnosticity to our framework that allows us to integrate with any LLM out there. I mentioned OpenAI. We work with Perplexity. We build models off of Llama. And we have our own knowledge domain. So we have this sort of, what we call it the yin and yang structure of we can build our own, and we can partner with the best LLMs out there, and we can arbitrate. So we have, and by the way, we have full stack solutions, edge, hybrid, cloud. So all of that allowed us to bring new innovation and a speed, which, as I mentioned, one of the best ways in the auto space to look at like how are EVs choosing, and we've won now several EV brands around the world. Again, I think on the basis of tech. So hopefully that's one color commentary. I could answer it for other industries as well, because we think on the restaurant side it's even more distinct. But maybe to jump to your second question. So our balance sheet's very strong. At the end of, I just reported, the end of the year we were $200 million of cash, no debt. We have more than enough. I've also mentioned in an outlook that we expect to be adjusted EBITDA positive by the end of the year. For us, software company, adjusted EBITDA is a really good proxy for free cash flow. So the burn, we're moving from losses for many years to now break even. And I've conveyed, and I'll say it again, the expectation the investors should have from us is that at full, like sort of down the road, as a software company, we should have 70% EBIT margins, 7% gross margins, 30% EBIT margins. Let me check that one back, 30% EBIT margins. We'll scale to that. But frankly, for the next horizon, a few years, we're probably going to be in the break-even zone because we want to keep investing. So to your question on where do we see opportunity, there's outsized return opportunity. When you're in these major inflections of new, technological era, we want to reinvest capital because there's outsized returns. There's returns well in excess of the risk-adjusted cost of capital. And so we will be reinvesting in the business, but we could do it from break-even profile for, the subsequent years.
Just a little bit on, because you have such a good EBITDA margin, right? You say you're going to try to invest more, right, to bring it back down, go on the offensive side. So what are the things you're thinking about to invest?
Yeah, I think organically we want to voice enable the world. So we want to go further in new industries and grow deeper in, the restaurant stack, for example. Just in the U.S. alone, to give you a data point, there's probably 250,000 quick service restaurant drive-thrus. Drive-thrus on average, and I won't give you specific names, but there are customers north of this. Average roughly is $1,000 per lane per month recurring revenue. And if you take the hundreds of thousands times that, you quickly get billions of dollars opportunity. I'm not even talking about phone ordering, which might be a smaller footprint, maybe $100 per location per month. But from a recurring revenue basis, it's massive from the scale we're talking about. We have a running start. That's a huge TAM. Healthcare, financial services, millions of interactions a year that can be automated. And by getting customers, and one of the things we've done with the acquisitions, you've seen a little bit of a reduction in our gross margin, is we're going in with some parts of our business that are call center oriented. Well, we're not trying to be in the call center business, but what's great about it is you get access to production-ready data that you can utilize into our engines and automate over time. If we can get more and more of these interactions, more and more of these orders, we can just continue to build and leverage that and scale. So and this last quarter, we talked about entry into new industry, energy, large electric utility. For people to call in, like, what my power's out, what's going on with my billing. All these use cases, how the world is moving, we want to aggressively go capture that and, be first movers in this business.
Please.
Just, I guess another CFO question. You mentioned that you're going to delay your 10K because of the acquisitions. What's the hang-up? Meaning that what is complex about these two acquisitions you've made? Is there an estimated time when you will file?
Yeah, we filed this morning, so it's out there for everybody to see. So it was just a few day delay, but thank you for the question. So first of all, and everything was materially exactly what we talked about a couple weeks ago at earnings. So you can go through it. There's obviously a lot more content with the notes. Let me go to your question on complexity with the acquisition. So we bought companies. We have, as a small company, we have 3 ERP systems. We had a lot of processes that were manual that we're automating and improving over time. Fully disclosive on where we are in a control environment. We're an early emerging growth company. We're trying to aggressively scale. So we're going to continue to make meaningful investments in our infrastructure and processing controls. And obviously we don't want to delay. We got it done. And we're going to this year integrate our ERP stacks. We're integrating payroll systems. All these things are just as a small company with limited resources, we're trying to do a lot. So I'm proud of the team to kind of, that we're getting through this. Again, we got it filed today, and nothing really meaningfully different than what we said a couple weeks ago.
And maybe one more, just,
Yeah.
Just on the competition in the pure cloud AI space. I mean, there's 𝗪𝗪 AI and there's some other competitors. Can you talk about basically first nuance, which is maybe you could say it's old tech, right? But like there's other competitors. How do you feel like any market shares you think you can give us a sense of where you dominate and by how much, and who would be the competitors you worry about?
Yeah, first of all, I think any new breakthrough technological area, there's going to be a lot of new competition, and we welcome it. It's a sign of a good, healthy market. I think there are two things. We continue to perform on tech innovation. We'll continue to invest. That's been the roots of this company, and I mentioned a couple of benchmarks earlier on like our speech recognition, on word error rate, and how we outperform, and so our technology is more accurate. There are a lot of companies who are coming in and saying, oh, great, I could just integrate with an API from an LLM, and I can do some good things. We really think a lot of differentiation is going to come from the integration stack. So with restaurants, how we're building in integrations with the point of sale systems into, we partner, for example, in restaurants with Toast, Square, Ola, Oracle, Micro, Symphony. With some of the bigger ones, we're building custom integrations. With the enterprise side on healthcare and financial services, you got to build integrations with their ecosystems. There's high security and privacy concerns, and so the differentiation is going to be who has got deeper, integration stacks along with differentiated technology, and both of those are going to matter. So I think there are a lot of players out there. We got to keep moving, and we showcase our technology. We talk about public benchmarks, so on the performance, that's one area where we'll hopefully continue to distinguish ourselves. But number two is just more and more brands. I talked about some of the top, 1/3 of the big QSRs, 70% of the global financial institutions, top ones. And that's how we're going to continue to, differentiate ourselves, is build onto those relationships, expand use cases, enter into a customer base, and then do a lot more with them. That's how we'll keep the lead.
Sir.
Hey, Nitesh, appreciate it. I'm a little newer to the story, so apologies if this is something you've covered before. But so Amelia and Sync, I guess, roughly contribute about 26 to 28 quarterly run rate. So I guess what's with the maybe lumpiness in sound, like organic SoundHound revenues for back half of 24? I guess about $7 million a quarter. And what causes that to maybe stabilize and grow
Yeah, there's a lot to unpack there, so I'll try to simplify it. So number one, the organic and inorganic, especially for acquisitions that have been around a while, becomes a little muddy, especially when we take our speech recognition engine, our ASR, and port it into a customer environment, and we get scale with that, and we help stem, a trajectory shift. Like, that's all baked in the numbers. So I know when we put our numbers out there, they're based on legal entity. But I could give you an example. Like with Sync3, many of their customers, that business, and it's all in the pro formas, was declining 30%. And we basically went in, we improved the technology stack and allowed a turnaround in that business. And the same thing's happening with Amelia. So we kind of look at it like, well, it's organic. It's actually SoundHound's native technology stack going into these existing customers. So I want to make that one premise. That makes our financial a little bit different. Maybe if you're traditionally, somebody bought a completely, separate business that sits on the side. But to your point on like what's going to drive growth in the future, I mean, it will be contribution across the board. So our royalty business and auto business, we think is a steady grower, and we'll continue to penetrate and grow in units. The services business, where I'd say for this year and probably a large part of next year, is where we're going to really gain traction. Tom mentioned earlier, like, all right, we're not setting expectation that the third pillar monetization is going to be a major revenue contributor this year, but certainly over time that will become a meaningful part of the business. So for us, it's going to be continuing to grow. And the scale and types of industries we go for, sometimes there's traditional SaaS rollout, but some industries, the energy industry, actually the capital intensity of it, they do like licensing business. Well, licensing business, especially if it's an edge solution, creates some lumpiness, and we've seen that historically at SoundHound. So that's all calibrated in our expectations. Ultimately, we want to keep growing aggressively in the restaurant space. We know we get a lot more penetration in the enterprise space. We'll continue to grow the pillars. The automotive business and IoT business. And then monetization will continue to hopefully build this flywheel where it really might be driven by monetization, but maybe we're getting more subscription revenue first, and then ultimately the transactional revenue will come along. So hopefully that helps give some color.
And then the back half is also just like integrating all that stuff.
Yeah, we're investing. So Amelia was privately owned for a couple of years. They were trying to right-size the cost structure. There's a lot of great product and technology. It's top right leader in Magic Quadrant. And we're investing in go-to-market. We're reinvesting in the customer success to help retain customers, improve retention rates. That's stuff that we've been doing since the acquisition that we do expect some improvement. We got to continue to grow and scale from proof of concept and pilot to actually scaling out and rolling out. And the calibration on a restaurant side between phone ordering is a little different than drive-thru in terms of how fast it can go. But with phone ordering, you can really scale it very quickly because once you're integrated with a point of sale system, it can go. Sometimes it's about conversation with franchisees and so forth. So there's a lot of variables that go into our expectation to scale. A lot of great conversations, and we believe we're in the early days. We've been growing for the last several years, 50% CAGR since many years, and organically that was the pace before even the acquisitions. Obviously now last quarter we grew 100%. So over time we expect. If I were to paint a picture, as I did on the P&L profile, for us, early days of this Gen AI era and voice AI, we should be a 50% CAGR for a long time. And frankly, 10 years out, that should be a disappointment if that's all we deliver.
We do have one more question. He just wanted to ask this question for a long time. I know we're almost at time.
Sure.
I know Amelia has a long-standing relationship with a large contact center player. I was wondering if you could touch on the nature of that partnership and what it would look like moving forward. And you touched on this before, but your intentions in contact center.
Right. Good
Yeah.
question.
Well, so we do. And one of the beautiful things with Amelia, thanks for the question, is the opportunity to scale with channel partners. Because the indirect channel, we both go to market, both direct and indirect channel, and working with contact CCaaS players is a great way for us to scale. We're looking at other systems integrators as an opportunity to scale. I do think, there's great partnership, and like everything in technology is co-opetition, right? Lines are getting blurred. We come in with conversational AI stack that sits on top of a lot of CCaaS solutions. Over time with data and ingestion, there's a lot more that can be done automated. If you can do more containment of those interactions, that's more sort of capacity and revenue that we'll be able to accrete. But I would just say generally, we're looking to expand our indirect channel partnerships, and we think we can scale healthily that way as well as through our own direct channels.
We're at time. That was very good. A lot there, a lot to be excited about with SoundHound. Thank you very much.
Thank you.